It's Stuart here, and we finally got to Friday. Well, at the end of the month, also end of the week, obviously, and it's also the end of the quarter on Monday, technically. But I know many positions, many portfolios, many private and institutional traders will be wrapping up the quarter and month today. So let me just check everything is working. The audio sounds a bit funny. If you can hear me, oh, excuse me. Oh dear me! I had a very quick Rivita before I just switched on, and that was obviously a mistake. Anyway, I hope you're well. It's Friday, and we've got, as it says down here, we got core PCE, the key measure of price inflation or deflation in the United States. That the Fed, the FOMC, the Federal Open Market Committee, the guys and the girls, the decision makers of interest rate, monetary policy in the US deem as their key parameter for measuring prices rising or falling in the United States. So the core PCE price index, that data is up in a little over 12 minutes time. So we'll obviously have a look at that in a minute. If I didn't mean to do that, did I? There we are. I meant to stick on our calendar down here, which I'll come on to that in a minute. So gold this morning has been obviously many people's preferred trade instrument, and we've hit new all-time highs this morning in early European trades. This morning we went to $3,085 for a troy ounce this morning. Some profit taking clearly on that, I would argue. Here it wasn't really the data that's lifted the dollar a tad this morning, but dollar improved, and major currencies have moved down against the dollar this morning here. But the 8 o'clock candle took us back under the 20. This is only on the 30-minute time frame, so we'll look at the hourly chart. Actually, it's not my default, isn't it? There we are. So it's the there we are. There's the 7 o'clock candle, and the 8 o'clock, 9 o'clock candle. We went down to 30.66. And we're back to 30.75 at the moment. We got long last night. If you were following me on Discord, it's all free on there, guys. I don't know why more of you don't follow me on comment on that. We've had a fantastic few weeks, January, February, and March has been stunning for us. Yeah, it's I'm not saying I'm the world's greatest trader. I'm far from that. But I know what works for me, what works for my personality. And I know what makes money at the end of the week, end of the month. And that's where we are now. So some of these positions will be getting closed out today, along with me and everybody else that's had a good March. So 30.73. In fact, we've come down a tad again on gold this morning, but it remains long. We're still in there. We got in here. I'm sure my stop loss. It's still quite a long way away, isn't it? I might pull that up. I've got the 4-hour time frame. There we are. Our stop loss got pulled up this morning to 20.30. There's a stop loss from last night. I might just drag that up to entry. What the hell? And we're definitely not losing anything here on the 4-hour candle. And I'll watch that as the day rolls on. So stop loss now on entry on our trade on the gold position from last night. Let's go back to the where's my trading strategies here on our Discord group, guys, is where I put all the trades. Typically at the end of the day, they're end of day trades, typically based on the daily time frame. But some intraday trades, I put some on early last night. We were long euro yen and Kiwi yen. That's reversed. They're nearly stopped out. Those I'll have a look at those in a minute. So yeah, we were out flat. Again, we pulled some of these up to stop loss yesterday. The Aussie, Swiss, Euro, Oz, and the dollar. I think the Kiwi's still open, isn't it? But and then last night we took these short trades, long trade on gold at 30, 50, 54, 55 we were in. So $20 to the good on that. That's a nice, pip haul. Percentage-wise, it's not, it's still fairly substantial, but obviously pip points numbers, which is how I post them on here, because that's how I get paid. I get paid pounds per point. So that's a good haul, and we're also in the money here on our short US indices trades, but more on those later on. We'll come back to those. I say the Kiwis out of the money, but we'll come back to those once we get to the. Let me just bring in the calendar. When we bring in the once we bring in the data that's about to drop in 5 minutes time. So let me just bring in Forex Factory. My calendar again is not connecting properly this morning, so I'm going to use the Forex Factory calendar again this today. So 6 minutes, or is this 6 minutes? Is it close? Yeah, it was 6 minutes away from the core PCE numbers. Let me just check my calendar again. It may have fixed itself. Sometimes it does. It drops out and then it reconnects. It might be to do with the data that's coming over. Just bear with me a second. Let me just find it down here. Trading. No, it's not updated. Oh, hang on. It may have updated for today. Just want the events. See, sometimes I filter out some of the stuff I don't want to see, and it takes forever to connect. So it's still spinning down here to the downside. So PCE, why is it important? Well, it's the main reason is it's another measure. It's like CPI. It's a measure of prices going up or going down in the United States, but it's key because the Fed focus on it as their key indicator. If we look at the rate of decline in here, so this is the monthly number. 0.3 of 1% is what's expected. Yeah, our calendar's not working, so let me just default that. Our calendar actually. There we are. It's worked better when I've taken the. Right, I'll just bring in our calendar here. And there we are. So let me just bring in our calendar. I've put everything else on here, and I'll. There we are. I'll try and zoom this up. I only discovered this yesterday. I don't know why I haven't done this before, but hopefully you can see that a lot better than normal. Now I've zoomed it up, or can you? Let me zoom that up. Is that just zoomed for me? Is that changing for everybody? Yeah, there we are. So is that too big? Can't be too big, can we? You've still got me, haven't we? Let's move me a bit smaller. There we are. That's oh, there we are. That's nice and huge, isn't it? So here we are. Where are we? Friday. CFTC's still to come. So we got the price index. So 0.3 of 1%. That's the one we saw on the Forex Factory calendar. So these numbers are key. Personal spending, personal consumption as well. We'll see how that all pans out. I say in a minute when this all comes across the terminals in 4 minutes time. Let me just get and we'll see if that has an impact on. See if that has an impact on the CME. We'll have a look at the CME in a minute as well. Sorry, I didn't have all these sites open to have a look at later. So we'll bring in those later. So this is what we're looking for. Really quite potentially market movement. It's a bit of a surprise. More not great data this morning. I was saying about the gold moving down. Gold moved up and then down again. The German data this morning, unemployment changes significantly tweaked up and was worse than expected, and previous month was worse than had been previously reported. It's twice as much as it was. It was about 4 and a bit thousand. It's 9,000 for February and 26,000 for March. Unemployment rate has ticked up 1 whole point to 6.3% now in Germany. So although there's some green shoots starting to appear in the German economy, certainly around the services sector, the manufacturing still remains moribund. We had a more negative data, and obviously the tariff talk, particularly on the cars, obviously has a significant impact on German auto manufacturers as well, exporting to the United States. As I say, data in a few minutes. So something else I was going to show you before the let me find the calendar. Right, so that's the ongoing. We can show here with on the monthly progress for PCE, how it's just, it's continuing to, it's not moving, it's not disappearing. It's a continual. Again, can we zoom that up as well? There we can. There we are. It's a continual movement. It's not moving away. It's not turning down. We've got this month after month around about the 0.3, 0.4, 1% up to 0.5% here. This was about a year ago, wasn't it? But we negative a couple of months. So the persistence around inflation remains there. So it's not. Was that the wrong? Oh, what was the Canadian GDP I was showing you there? The story. Here we are. This better. The story of, so it's remaining sticky. It's remaining around. It's not disappearing. We're not down to this 1.1 of 1% or disappearing altogether. It has this obviously the peaks we've had in the COVID crisis, but as you can see, it's sort of just going down, but it's leveling out. So this story of stickiness around the PCE number remains stuck basically. So let's just see how this runs out in the next minute or so. Let me in the meantime, just put it in dollar CAD, because we've got those GDP numbers for the Canadian dollar as well, and we just put the majors on. So actually, euro here in the today has been down. The strategy here was short this morning from 7 o'clock. Couldn't get to 108 again, and we've moved down all morning. May have found a floor, but yesterday here we went. It wasn't yesterday. This was Wednesday, wasn't it? We went to 107.35 yesterday. We was down at 107.50 zone again. So these are our two downward targets to the downside for euro today. If this decline continues, just put that in there. So that's that one there, and that one from Wednesday is here to the downside. Obviously, to the upside would be a significant break and hold of 108. That hasn't happened today, so we're continuing to move to the downside. Let's have a quick look back if the data's come out. So it's come in hotter than expected. So again, this story we've been talking about for many months now. There's persistence of inflation. This is again the March data. It won't have taken in anything. Well, it might have captured a bit of the Trump tariffs, because remember the first announcement came on. I think it was Valentine's Day, wasn't it? 14th of February. So will we? Excuse me. It's that dry. That's that rye crisp bread sticking again. So it's coming hotter than expected. GDP in Canada's better than expected as well, which is a nice surprise for Mr. Carney, new Prime Minister. But as far as the more important data today, the core PCE, it's coming hotter than expected. That should have perked up the dollar, given that this persistence around inflation is still there. Certainly, that's what that is showing. If we just go, there we are. So we're back to the high levels we had. We were down for a couple of months, then we went back up. We were down for a couple of months. 3 or 4 months there, 6 months or so. Then we went back up for a couple of months here towards the end of 2024. We've been a bit weaker as we ended 2024. January was a spike up 0.3 for February, and March has come in at 0.4. So let's refresh that a bit. So actually bring that up as well. Sorry, just going back to Friday. There we are. There's the data that's just dropped here, and it's the highest we've seen since this time last year, February 2024. You can see that. So it's the highest we've seen since February 24, and before that was May 2023. So it's like a 2-year high, if you like. Last time it was getting a bit twitchy. Was back in February 2023. So more or less, a 24, 23 month high for the core PCE. So that will, tweak perhaps what the Fed say at their next meeting. In fact, actually, no, they're not meeting till May, are they? So we've got the April numbers before the May meeting. 7th of May is the next Fed meeting, isn't it? It's got the minutes before that is what I'm thinking of. Yeah, so a high reading. So we should have expected some movement in the dollar. Yeah, so the dollar's actually just to put that on the 5-minute reaction. Dollar's weakened on that, on expectations that the Fed may have to move. Well, there's still the expectation we will get 2 basis points, 25 basis points cut by the end of the year. That's so that might have raised the expectations of that somewhat here as we get to the end of the first quarter today. So 107.75 here is the immediate reaction to the data on the forex market. Gold will have subsequently perhaps sorry, so that's euro up. Sterling would have ticked up as well, having hit a low down here at 129.25 zone this morning, and it's back up. Remember, this is just a 5-minute chart. If we look at reaction to gold, which is to say is had a really good morning, 77. So again, that's having moved down in the last half an hour or so, it's turned back up. So we're back over the 30.75 level, which is where we were when we started talking, or I started talking about 20 minutes ago. So yeah, gold continues to hold its gain as on a weaker dollar. Yields will have moved as well. Let me just check the yield numbers. Yeah, yield curve, and let's have a look how that's impacted the futures market on the stock markets. Remember, we are short these 3 from last night, so we're going down again. Interestingly, on the data, so the US 30 has moved down to not quite a low of the day. The low of the earlier this morning, we were down here at 42.170. We're at 42.200 at the moment. The S&P 500 also down, but off, above its lows of the day. I'll be looking at that later on, seeing when we can perhaps close that out. But that's the low of the day I'll be looking for later. Oh, come on. Horizontal ray was down here at 5667. Now we're at 5676 at the moment, so 10 points above the low of the day. But we're well in the money from our entry last night at 5,700. That seems a bit high. I think we got filled at that price, but perhaps we did. Let's double check. Oh yeah, 5707. I thought we'd have remembered that number. It's a round number, but it was indeed 5707. So yeah, nicely in the money on that one as well. And also the Nasdaq took a big hit yesterday. I can actually record the close of the prices yesterday, but we had a big hit. Sorry, a big hit on Wednesday, wasn't it? When we were down 2%. My phone's going mental for some reason. It's my son and my wife. So yeah, again, let me just put that in because I'm going to be watching that later on if we get back to there. It's interesting here on this 5-minute chart. The futures might just close it off, but I'll let you know when I've closed that position. I probably won't hang this over the weekend, given it was such. We are at the end of the month, but see how the cash market reacts on open in an hour's time. The other thing to remember, just on talking about an hour's time, we're obviously out of sync at the moment. The European clocks go forward for summertime this weekend. So with the hour we've been out of sync with the United States and Canada, North America comes to an end. So summertime starts in Europe over the weekend. So that disparity for European traders actually disappears. So we've still got a 2-hour difference between Eastern Europe and here in London, an hour's distance between London and Frankfurt, but we're all moving forward into summertime, so we'll have lighter evenings and it might be a bit darker earlier in the morning to start off with. But anyway, that's obviously just be aware of your timings. The timings on the announcements will change as well, but we'll be around for the actual live news as we've had here. So stocks continue to move down. We're having a good day today, aren't we? Gold continues to move up, and the the dollar has has weakened on the PCE data. Let's see if we've had a change of heart. We haven't indeed. So euro now 107.76 from this morning's low at 107.64 ahead of the data. So the turn certainly here in this 5-minute time is very much in place. So I'm happy to take a long position from there, but you can see here on this 5-minute time that we rallied right to a key sort of stalling area, which is basically the round number 107.75 is where we've sort of ran into. You see that here on the 5-minute? I hope you can see that. Yeah. Support as we were moving down, went under it, resistance still going up, big leg down, resistance to going up here, broke it, then went down again, then down again. But you see the lows were getting lower, the highs were getting lower. Data's come out and turn that trend down. So this 5-minute trend, when we were the initial break was back here at 7:45. It retraced a wee bit. If you've got your stop loss a bit too close, you'd be taken out. But then you could have added short there at 8:10, and it's run down, ran into the 20. It hasn't taken us out, but it has gone over the 9. The middle, you would have been taken out there, got back in there. That would have been a losing trade because it would have come back. Sorry, you would have got back in there. That's gone against you. Looks like you're going to go long there. That hasn't worked out. It's gone short immediately. So that was a losing trade. That was a losing trade there. Losing trade here at 10:40. Winning trade there from 10:45 as it's turned around. We moved down quite nicely. Come back. You would have got out there. That would have again. This is an automated system. If you're still trading this ahead of the key data, you would have gone long there and got short there. Actually, that would have been quite a big losing trade. That one, and that one's not worked out. But again, we're now this is a 12 o'clock trade on the 5-minute time frame. Known as big news coming at 12:15. So you should have been out really at least typically an hour or half an hour before that. Obviously, if you're short term scalper, you wouldn't necessarily follow those rules. But the hourly trade, if you just flip back. It's why it's so important to have a clear mindset about what time frame you're trading. Don't flip from one to the other. But say if the hourly trader was short there, the system would have triggered short if you weren't up at 5 o'clock. Your stop loss probably back at 108, and it may even been a bit higher because of these spikes yesterday. But you're still short basically. You haven't come out of that. You might be looking to come out if you're following the mid moving average retrace. That's a 50 period moving average as well, which is much thicker than the 5 and the 9. So you're still short, although you're not as in as much profit as you were an hour or so ago. But the main data of the day is out. So are we going to go into that, test that, and then move down, or are we going to go into this, break this, and have another go? Oh, right. Nobody knows. And if somebody tells you they believe what's going to happen because of volume and blah, 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 well, so be it. But, make sure you have your risk management set up properly, your money management set up properly, and, always act accordingly. So this remains short on the hourly. The 5-minute, as I say, has turned around. So the faster 5-minute time frames turn around. It's cooling a wee bit at the moment. Can you see all of that all right? Yeah. Cooling a wee bit at the moment, but still holding up. So interestingly, the reaction, our top has been at 107.80 after 10 minutes of the data, and we're moving down. So that's the next upside target, 107.80. If this is going to continue to move higher, happy to have your stop loss here now, around about the 50 period moving average here on this 5-minute time frame. Also comes through this area. So see how that pans out. Going forward. So let's just go back to the calendar. So a significant option. Wasn't that updated? I had a card. Didn't update. Oh, it must have been the other calendar, wasn't it? So it's, yeah, because it was, I was looking at Forex Factory, wasn't I? So where are we? Thursday, Friday, there we are. There's the German unemployment CPI out of, it's got everything in it now. There we are. So hotter than expected, 2.8% from 2.7%. Last month was also upgraded from 2.6% to 2.7%. So it's a significant number. The monthly one has boosted the annualized number to 2.8% for core PCE price index. This is a key number that the Fed look at, as we said earlier, and the consumption and the spending, the income and spending as well. Income quite aggressive, spending a bit of a miss, but it's turned negative, and it's gone more negative for February as well. So it's a very mixed picture. That's a suggestion that the US consumer is starting to blink a bit, and inflation is still real and it's still impacting everyone. So wages, salaries, earnings are up, and it's had a hit on the dollar. We'll go back. So euro up at 107.80 has been the reaction, and stocks. Stocks should have weakened a tad on that. Yields 10-year, the key 10-year back to at 330 plus level, so 332.25. I think that's saying. I can see here on my feed. So just go have a quick look. That's it. It's an interesting reaction to for the stock market here. The initial reaction, one would have expected that to have been reversed, but it is moving lower. And I'd say the test, it looks like the lows of. I might be looking to take that out there. So the lows of the day look like they want to be tested, don't they? Here on the Dow. In fact, I did on here, didn't I? Didn't on that one. Oh no, it's on that one. The Dow. So I'll be looking to look at I've got the daily tab. Wow, we put this on. No, we were short here, and my target is initially down here from last week, but there's a gap there that needs filling. Whether we actually get that today or not, we'll see. But and again, just from a technical point of view, I might just want to wrap that up for Friday so I can sleep nicely over the weekend. And bag some more pips and points for the month and the quarter. So Dow still down, S&P also. Let's go back to the 5-minute on that. Interesting. So it's went to test the low of the day, as we saw before, but it's now coming back a wee bit. It's a bit more what you might want to expect, but we'll see. Obviously how the cash market impacts this in about 45 minutes time. And the Nasdaq similar sort of 10-minute initial move lower on the data, and it's sort of recovering a bit at the moment, but still we're still very much in the money on those 3 short positions. The other 2 positions that were open were from last night, and just go back to those. They were out of the money. That was Euro, Yen, and Kiwi Yen. Here we are. Euro, Kiwi Yen. See how that's impacted us. Where are we? So our entry, our stop loss have turned around from earlier this morning when I first looked at this, but we're still out of the money. And again, probably one will get closed out before the close of business today, as it's gone against us. So obviously it's an end of day basis, so I should perhaps leave it. But again, it's just an admin exercise for the end of the month more than anything. And the other one was Euro Yen, wasn't it? Euro JPY, and that's in a similar state, I think. There we are. Was that before? That was yesterday before we actually opened it, wasn't it? 5 o'clock went to the target. So again, it's a similar position, got us less close to its stop loss, if you like. But again, another one. This key 163.20 level, it couldn't. That's from a previous chart and a previous time frame, but you can see here on the hourly chart, it's not moved as much as the Kiwi bounced back against the yen. So yen's had a good Friday into the end of the month there, which is a bit of a surprise given the amount of dollars getting repatriated for the end of their financial year. We'll see what that looks like. So there we go. There's all our open positions, very much in the money. So far this week, I didn't do any. We are plus 346 points for the week at the moment. We had a gain of 298 points yesterday, and we'll wrap that up obviously at the end of the week, and I'll post it on the Discord group how we've done. But we've done very well for the quarter as well. So I say do follow me here. It's on the trading strategies blog. I didn't want to leave it on the general chat because that is, as it says, general chat about trading and everything. But there we are. Not what these guys are talking about here, but something about instruments. But so the data, the trades go here on the trading strategies. So there we go. A wrap up for PCE coming in hotter than expected. 2.8% on an annual basis, and 0.4 of 1% on a monthly basis, both hotter than expected. And the other key thing was that the January data was revised higher to 2.6 from 2.7, and we're starting to see the impact of some of the Trump plays, the Trump trades, the Trump policies starting to filter through to this potential hotter inflation. How much hotter it's going to get, only time will tell. Will it get that much hotter? Will it have a bit the impact that lots of the anti-Trump lobby are talking about, or is it just going to be a key negotiating stance? There's so much stuff getting thrown around at the moment on the wall. Everything from peace deal in between Hamas and Israel, peace deal between or ceasefire between Ukraine and Russia. Obviously, the whole Greenland situation today with Vice President Vance going to Greenland in a very small American base. None of the Greenlanders want them there. There's only 57,000 Greenlanders, but nobody, absolutely nobody apparently, not one single family wanted him to be there. It was only his wife going initially, but he's joined her. He's joined his wife in Greenland. They need it. Apparently, the Americans, they need it, even though it's part of a different country. The Danes feel very differently about that, obviously, and happy to have them at their submarine bases, but they don't need the whole country. If you look at the geography of Greenland, it's absolutely enormous as a land mass, and it, lots of not only key minerals, who knows what's under the Arctic, but also obviously all that cold, fresh water stored there as well. Somebody's been in the ear of Mr. Trump, and he decides he wants to expand the American territories. But anyway, I'm getting dragged into politics again. So where are we? So we've got a weaker dollar, weaker stocks, and yields still holding up relatively high in the US. So what's to come next week? Let's have a look at the calendar for next week. Let's just change the tank. Oh, it's huge, isn't it? Tank. Brazil. Oh, might actually run on it today. India. No disrespect, my friends, but it's just it just clutter the calendar up. See if it actually. Oh, it's not going to run. I want next week. So it's going to run for us. So we go. Okay, so Monday kicks off with the PMI data and German inflation in the morning as well. PMI data from China comes out over the week. Oh, over the weekend on Sunday night. as the markets have opened. This is the new time. So markets will have opened when the Chinese PMI data drops. Retail sales from Germany to kick off the European session, and then the highlight is the German inflation data. Remember, they do it on a federal state basis, and then it doesn't come out as a oneer at X o'clock, at 12 o'clock. Really, it's by then they should start. The both should be in. So it's each in federal state in Germany contributes to the final reading for the German CPI on Monday. Chicago PMIs, the big US market moving event on Monday. I'll be live with you for that. April starts on Tuesday, the 1st of April, new month. Obviously, we have some potential end of month, end of quarter noise on Monday as well. The private casing manufacturing PMIs out of China again overnight. We've got a non-decision really from the RBA, but a forward-looking, how sticky is inflation in Australia? They've had some issues with the very high pockets of house prices as well. So RBA rate decision, no change, remaining at 4.1% on Tuesday. PMI data from Europe in the morning, speech from Ms. Lagarde. And then we've got the key US data is the both the manufacturing and the services PMIs. Remember, PMIs are forward-looking. Will we get a stronger manufacturing, or will we move back down into contraction? That's what I'm really looking for on Tuesday from the manufacturing number. Has the strength of services. Remember, services was ticking up last month. See what that looks like from the key Institute of Service Management on Tuesday. Wednesday brings us, as it's non-farm payroll week, we get ADP, remember, on the Wednesday before the Friday event of the week. 77,000 is expected, quite a trimming of private payrolls on Wednesday from the ADP. So again, check that. Private crude inventories would have come out on Tuesday as well. I forgot to mention about the JOLTS report. We'll be live for this announcement here. As you can see, it's now 2 o'clock. Sorry, it's 3 o'clock. Still got the old time. It's going to be 3 o'clock London time for the JOLTS and the ISM numbers on Tuesday. And the other thing will be the factory orders, obviously, because of the this impact on from the tariffs. That'll be a key point of data as well later on Wednesday. Thursday brings us the Bank of England FSR overnight, and inflation from Switzerland, PMIs from the UK. And Thursday afternoon is the key services data from the S&P for the US, as well as the ISM numbers as well. So we've got both institutions. The ISM is more market impactful than the S&P. That's the data. That's the number that's always quoted. So US services, they call them non-manufacturing here in the ISM, but it's the services PMIs from the US on Thursday, as ever, as we start the new month. Other key note is the Fed's balance sheet. See what that's looking like as well later on Thursday. Friday is obviously non-farm payrolls. More on that next week as we go through it. But about 120,000, 125,000 new jobs. What's the unemployment rate? Is it going to tick up again like we had that surprise last month? 8% back for the U6. Remember that was I was a bit shocked with that last month. And another tick in unemployment is what the consensus is, 4.2%. But I say more on that next week. And there's also the members of the Fed are in front of the Senate committee as well. So Powell's got a speech. Barr, who's the new vice chair for supervision, he's just been nominated he's been confirmed in that position, and Mr. Waller speaks as well. But certainly Powell's speech at 3:30 after the payrolls at 1:30. This is the time here is GMT still, but 1:30 London time. on Friday. So big week next week. We've got the end of the month. We've got the beginning of the new month. We've got non-farm payroll. So plenty going on. But as ever, always manage your risk and manage your account management, my friends. One thing I did want to show you, we've just put up on our website a nice little document that explains really clearly the benefits of static versus trailing drawdowns. And there's a video that goes with it, which is great. I was going to show you it. I'm going to run it here for it's about 2.5 minutes, but it's very clear. Once you become a successful trader, the fact that static drawdown gives you a much bigger margin. The trailing drawdown moves up with you. So, and then when you start, so if you won, I mean, explains it here quite nicely. So if your equity's gone to 105,000 from 100,000, a trailing a trailing drawdown would have the 10K just back here at 195,000, whereas the statics remains static at 90,000, 10%, isn't it, of your original 100,000? You got 15,000 cushion. With a trailing, you've only got 10,000 cushion. And then when this moves down, if you start losing money, so you go from 101 back to 100,000, the trailing stop loss doesn't move back down with you. So you're losing out on your margin, on your margin on your equity as your equity curve goes up. So there you go. Trailing lockdown locks in your gains, but also tightens your risk, making it harder to manage the trades as your account grows. Obviously, as your account grows, you should be able to sort of tweak your keep your risk fixed, but you tweak the amount your physical amount, the actual amount you're actually putting in the trade. So really nice video. So have a look at that. I'll run it here if it's so let's see if we can make this a wee bit bigger so you can all see it. If I zoom up, you can see what he's saying here. So there we are. So that's a static drawdown. I can listen to it here in my headline, but you can't obviously hear it in my microphone. So we'll just let this run. So again, so it's basically, what we do is at the propfirm.com is give you this static drawdown, and clearly, we'd argue that it's a better situation with a static drawdown rather than the trailing drawdown. And the charts explain this much more clear, or very clearly, than me prattling on or you listening to the audio on this. But just watch the charts as they grow. There we go. That's nice, clear. So I'll shut up. So you see what I mean? That you've still got that cushion with static drawdown. It's always at 10. Whereas the trailing drawdown, watch what happens. It's that's the phrase as well. High watermark. You see that on lots of prop firms. He's the kicker, as he says, and this is the key one. So, you have a blip, as we all do. Losses are inevitable, but this is profitable. So even as your equity curves comes down, so for me, what was 10K is now only 7 because it remains fixed. Flexibility, control, stock it as it says. Smarter choice gives you a fixed, no surprises. Best, if you're successful growing your account, scaling it to the 200,000, the proptrade.com is with you, my friends. So as I say, have a look at that. It's on our website, and if you want an account with us, or you've got an account with us, what's that going to open? Back to blog. Some of the stuff we've wrote. We'll just do some more. It's not going. I'm trying to show you there. Oh, there we are. There we are. So as I say, the accounts are here. The challenges are here for you. you know, up to 5 million, you scale your way up, you know, and if you've got a static drawdowns, a good way of helping you get there. Standard challenge, 2-step challenge, follow the rules, and you know, you can be successful. 8% now profit target, that's been pulled down 2 ticks. And on the I'll follow the second phase, 5% for the second phase. Okay. Again, you know, 25,000 is our most popular. It's $175 to give you the account of 25,000. But if you put a code in here, if you put an SC25, that will allow you a 20. I'll give you as you go to pay with however you're paying a 25% discount on that $175. So it gets you that for $130. Yeah, $130 on that. So best of luck, my friends. Let me just leave you with the gold market today. Let's see how we are. So gold remains I put gold there, didn't I? Not XAU. There we go. So having dipped this morning, we've had a low so far in the gold market this morning at just at European Open. Took us down to 30.65, and we're back to 30.78. So $2 higher than we were when I, or $2 to $4 higher than I was when we first came on. So we're still very much in the money on that trade from last night, and so I might be closing it out later on today just to wrap up the month. So there's no questions from anybody. I will close our lives for the week. Stay well, my friends, and always manage your risk. If you've got any questions, please contact me directly. Contact us on the Discord group, whether it's through the general chat. What is the last date to go? Oh, we've got a challenge going on as well, as Thompson said here, on Wednesday. So if you go to our bullseye predictions, the current one is if you predict the euro dollar position, or you're the best person or the closest person by for Friday the 4th, which is next Friday, which is when the closes, but you've got to submit your prediction by Wednesday. You can have 2 guesses on that. You win a $5,000 or you can win a $5,000 account. So if we just that's all on our social media page. There we are. That's another one. Giveaway alert: 5,000 challenge standard accounts, so the 2-step accounts. So enter on our website. This closes on Sunday. This challenge here, and the bullseye one. This is the last one. This is our gold one, and we had winners of a $5,000 account as well there. So have a go. It doesn't cost anything, and you got a chance of winning an account for free to get you started, get you in the marketplace. Okay, so check out our social media platforms and all the information there as well. So I will say leave you with the gold market. Have a quick run. Have a quick look at crypto before we go as well. Bitcoin back to 85,000, so it's down this morning, down today, and again sort of still in that channel. We look at the daily time frame. Remember, we were quite positive here on Monday, and we've sort of drifted all week, and it's quite a significant down day. We're now back under the 20-day moving average, so that trend line has been breached. Are we going to go back to the blue trend line? So it's quite a down day Friday so far for Bitcoin. So it's run out of steam before we got and held the 89,000 level, which had been this low point on the 13th. That was a big surprise move down, wasn't it? Before we moved all the way down to 76,000. So the rise up has been, although it's been steady. This might be just a shakeout for the week. But as you can see here, technically, it's taken out all of the gains from Monday. So we're sort of back to where we were this time last week. So the weekly candle will look absolutely flat. So we're not going anywhere at the moment. So yeah, not one that's really trending. So careful on the crypto front. Okay. Take care, everyone. I will see you all on Monday for the Chicago PCE. Euro has continued to move up. Yeah, so it's pushed another new high since we talked. We were there, we were down. Now we've gone higher again, 107.92. So not quite to 108, but certainly we're still long on this one post the data with our stop loss at the mid moving average there on this particular move up. So we're in the money on that one as well. Well, there we go. I don't know what I said there, but June hasn't moved it higher. Perhaps somebody's said something by the looks of things, or something's been announced. There's no data out at the moment. I'll see what's caused that, but there we go. 108's been tested again. So thanks very much. If I'd traded that, I'd be happy to take the pips from there. So 107.78 to 108, 12. Sorry, 170. That's 22 pips on the euro. Intraday is very nice. So some things clearly happened, and let's look what's actually happening. There's nothing across the blue. My Bloomberg on. I've got Bloomberg on YouTube down here, and there's nothing on my. More importantly, nothing on my Reuters terminal. Let's call it. But something's obviously said something or happened. Perhaps the Twitter feed that's been said, or Truth Social. That's come out, but I can't see anything here at the moment. So take care, my friends. I hope you're long euro dollar. Has it affected other dollars week? Yeah, dollars here, the 5-minute sterling also similar move here on the data through the 50 here as well. So dollars are weakening and gold's presumably. I said I was going to go, but some of the interesting to see gold's come down as dollars. What we're talking about, dollars weakening, so gold should have moved up, you would argue, but something's spooked things there. And stocks, how have they reacted? Interestingly, haven't been fairly positive. So there we go. We bounced. So there we go. We did test that low. Took 5 minutes ago. EU plans concessions for Trump after reciprocal tariffs hit. Oh, there we go. This is what's caused it. EU plans concessions for Trump after reciprocal tariffs hit. So they're not going to go after them after the Americans on the 2nd of April on Wednesday. So EU plans concessions for Trump after reciprocal tariffs hit. That's the headline that's running across the Bloomberg screens at the moment. So we've got a rally in sterling in the euros we've just seen. And back to 108, and stocks ticking up as well. So dollar weaker, stocks stronger on the back of that, and consequently the gold move. So volatility is everywhere. Gold is giving up another few dollars to the downside to 73. So that may have more to run as well. So anyway, I'm going to wrap it up now. I will see you Monday. Take care, everyone, and stay safe. Have a great weekend. And we'll see you all again on Monday and do it again. All the best, everyone. Bye-bye.